Welcome guys, welcome to another breakdown with Tommy Trading. I want to thank you guys for watching the video. Please do comment, like, and please do consider hitting that subscribe button so that I can continue to give breakdowns, very simplified and very easy breakdowns for all those who are new to trading or all those who are struggling to get over that that break-even hump, beginners or advanced alike. I know I needed all the help I could get in my trading journey, so I just feel like I should be able to share that knowledge and my experience with others as well, which is why I am here online breaking down these trades for you guys. So again, thank you guys for tuning in. So let's get down to this breakdown. I'm on the 4-hour time frame here on GBPJPY, and as you can see, this was the trade that I took yesterday. Let me go down to the 30 minutes so it can be clearer. This is the trade that I took yesterday on Wednesday, June 25th, and it was a London session trade, which I ended up getting stopped out at my trailing stop, which is with this green, which is what this green line is here. I got stopped out right there at the end of the New York session trading day. This was at 11 o'clock at night. This is South African Standard Time, which is GMT +2. So that was at the end of New York session is when I obviously then got stopped out at my trading stop, which is here. This was a 30 something pip trade. This was a 36 pip trade. My stop loss was a 25 pip stop loss, so I ended up closing off at a 1.44 risk to reward ratio, which isn't the best, but it is what it is. It's still profits nonetheless. And if I can quickly go down to my MetaTrader, as you can see here, it's very clear. I'd entered multiple positions over here, moved on up. Okay, with that being said, I just need to also mention that I do use only 2 indicators. One is a 50 SMA, and the other one is a session indicator. Lux Algo Sessions. It's free, and you can use it and configure it or customize it in your own way. Right. So for now, I'm just gonna hide these indicators. I don't use any other indicators because I like to keep my trading very simple. If you can see my charts are very clean. I don't have a lot going on, and I only do my markings around where price currently is, so in this vicinity here. I'm not going to waste my time wanting to make chart markings and drawings over here and over here and over here and whatnot. Nah, I keep it simple. Alright, so to break down this trade, I'm going to start off on the higher time frame.
So this is started here on a low, then a high, and then a higher low, and then a higher high, and then a higher low.
I mean, you guys get it. You guys have seen this a billion times. We're on an uptrend. That's the first thing I do. I look at the trend. Then I do my markings based on history, on the past and what happened. And this is, I'm not going to go into the reasons as to why I marked, why I made my markings and my drawings there. I'll probably do that in another video. But for now, I just want to break this trade down. All right, so uptrend, 4-hour time frame, and I don't necessarily believe in chart patterns, but I did learn them at the beginning of my trading career, so I never forgot them. But they do sometimes serve a good purpose, but I'll repeat this again, I do not consider chart patterns as part of my list of confluences when it comes to whether or not I'm going to take a trade. All right, this is just, I'm not going to say it's extra confluence because it's not, but this is just something that kind of shows me what price might just do. All right, so with that being said, I typically don't look at chart patterns and consider them to be anything of major importance. All right, and so yes, as you can see here, we have what looks like a flag. And by the way, guys, I use very simple terminology. You know, I don't go all out trying to be all majorly technical by knowing the names of candles, stick patterns, and chart patterns. And I don't use, you know, terminology like inducements and all that stuff. No, I don't. All right, I just use simple terminology. This here is a move, and this here is a pullback. This here is a move, and this here is a pullback, and this here is a move, and so on and so forth. All right, everyone's got their own terms that they use. You know, I hear people talking about this as a impulse, and this is a correction, and then impulse. You know, those aren't big words, but they also aren't self-explanatory. All right, and I tend to just use very simple, really easy to understand words that explain themselves very clearly. Right, it's self-explanatory. This is a move, and this is a pullback, meaning it is a move that had a backwards pull. Because forward, in this case, because it's an uptrend, this would be forward. So this is a forward move, and this is a pullback. This is a forward move, and this is a pullback. Self-explanatory, easy and simple, no complications whatsoever. Right, that is my style of that is how I approach trading. All right, so looking at this, we had a move, and then here is a pullback that has formed into sort of like a flag play, and this indicates that price is most likely going to go up. Right, obviously, like I said, these flags and chart patterns and whatnot are, I don't really consider to be major confluences for me. Right, so after seeing that we are on an uptrend on the H4, I then went down to the H1, and here is where I saw that price had broken out of what I've just drawn, that little flag, but also price is broken out of this little mini consolidation area here. Right, this little consolidation, this little consolidation area here, it broke out of it. Right, so it broke out of it with this major, or this massive bullish candle there. Right, now this gray area here, these are my major key levels that I draw on the H4 time frame. So this candle here went and retested this major resistance here, or major supply zone here. So what I needed to see to take a buy was to see if price was going to break this major resistance and then come back to retest it as a major support, which is exactly what it did. It broke very cleanly, broke through this on the hour time frame, and then came back the next hour to come and retest this major key level as a newly formed support. Right, as you can see over here, if I can just draw that out for you, as you can see over there. Right, this here was very important for me, because this bearish candle here, having formed that wick, this little wick here, makes me realize that, okay, price wants to reject this area. We're on an uptrend. It just broke support, or just broke resistance, and it's retesting it as support. And this wick here on the hour time frame this this bearish candle wick here is indicating to me that yes, price wants to go up. It wants to retest this major support zone and go on up, continuing with the trend, right? So that was my first sign to say this might just be a good trade. Secondly, I always obey my own rules, and my rules state that I only trade in the correct session. I do not trade GJ in the Frankfurt session. I may trade it in the Tokyo session, maybe like the first 2 or 3 hours of the Tokyo session. I will always trade it again in London and then sometimes in New York, but never in the Frankfurt trading session. That is when I can almost guarantee you will lose money. There are so many traders out there that say that they found GJ to really work out for them when they trade an hour or two before London, and that is usually during the Frankfurt session. For me, I have found that is not the case. So I stick to my rules. So I had to make sure that I can only enter this trade during the London session. Now, London opens at 9 a.m. South African Standard Time. So at this point, once price had came back down to retest, it was 9 a.m. as you can see, as indicated there. Right, but I'm looking for buys. I'm not looking for sells. So I had to go down again to the 30-minute. Again, I saw nice price action, breaking this resistance, coming back and retesting it as support. Right, this was now at 9:30. Now London session had already opened, and again on the 30-minute time frame, this bearish candle here with this wick gave me confirmation that price is going to go up. I didn't enter here. This was at 8:30. I didn't enter on this bullish candle here because it wasn't in my London session. As long as everyone understands why I always stick to my rules. All right, going back down to the 15-minute time frame, which is where I entered here. This bearish engulfing candle here came down, retested with a wick and rejected this major 4-hour support. This again was at 9:45 now. So another rule that I always abide by is that I do not take a trade. I never take a trade during the last 10 minutes of any hour. So once it says 10 to whatever it is, 10 to 9, 10 to 10, 10 to 12, 10 to 4, the last 10 minutes of every hour, I never enter a trade. No matter how juicy it is, I never enter a trade. I always wait for the hour candle to close, because that then gives me more information and more confirmation as to whether I'm going to enter or not. All right, so down to the M15, usually I would enter as soon as this candle creates this wick and closes, but it was already 9:45, and I figured, nah, let me rather wait until the hour candle closes. Let me wait until 10 o'clock hits. So I had to wait, went down to the 5-minute time frame, where over here I then waited for 10 o'clock to hit, right? So by 10 o'clock, this was the candle here, this little bearish candle here. It wicked again, rejecting this major support zone. I could have entered right there. However, I just wanted to have extra confirmation, right? That would confirm to me that price really is going up. So I had to wait for price to go up and close here on the 5-minute. Like I said, I actually entered on the 15-minute, so I had to wait for the 15-minute candle to close, and thereby it gave me an entry signal here. Again, another major rule is always wait for your entry signal, which is what I did here. I waited for this bullish candle here. This is not accurate, but anyway, make this smaller. This one here. right? Waited for that bullish candle to close, especially since it closed with this wick, and this wick was an official rejection again of this major 4-hour support, which is where I entered. All right, now for my stops, I had a 25 pip stop, as you can see here. The reason why I put my stop there was for one reason and one reason only. Because I am a scalper and oftentimes also an intraday trader, I seldom really hold trades in a swinging style. So I typically like to get in and out, or I can hold maybe for like 4, 5, 6 hours, but I'll never hold overnight. Right, and so I never really set my stops to be really that big, also because I really want a good risk to reward ratio, and this here was almost a 1-to-4 risk to reward ratio trade that I was looking to take here. So I set my stop losses here because looking at this 15-minute candle or 15-minute time frame, I figured that if price was to go up or come back down and close or go below these lows of these two candles here, right? So if price was to come all the way down, what am I doing? Price was to come all the way down and close there below these two, then I would know that, okay, I am okay, that was poorly illustrated. Let me say, yeah, if price was to come all the way down here, right? I don't know if that's clear, but anyway, I hope you guys get what I'm trying to say here, is that these two lows there needed to be broken for that to confirm to me that this was a bad entry, or this was not a trade worth taking, right? So what I then did was, once price closed there, I put my stops down there. And for my TP, you always go up to the higher time frames when you are setting your take profit. All right. You also monitor on higher time frames. You don't waste your time trying to monitor on the 15 or the 5-minute time frame. Right. So up to the 1-hour time frame here, it's a higher time frame. I saw that price was highly likely going to continue with the uptrend, which means it was highly likely going to break this next major key level, which is a major resistance level. And once it broke that, then I was probably obviously then going to aim for the next major key level, which is this one here, which is exactly where I put my take profit. Oh, by the way, another reason why I looked for buys is that, as you know, GJ and the yen index are negatively correlated, meaning they're inversely correlated. That means that if the yen currency here, the Japanese yen currency index, if that moves upwards, then that means that that means that GBPJPY, because it's negatively correlated to the yen index, if the yen index goes up, then GJ goes down. And if the yen index goes down, then GJ goes up, right? Now, looking at yesterday, which was June 25th, 10 a.m., this was where price was on the yen index. And it was clear that this was on a overall downtrend, as you can see there. And this being that 10 o'clock candle, as you can see, it was a bearish candle. It actually, the previous candle came up to retest this major resistance line, and then it retested it and rejected it, and then the next time the next 1 hour candle was a fully bearish one. This, from there, price having gone all the way up, consolidated a bit here, and then came down, broke this major support here, came back up to retest it as resistance. That made me realize that the Japanese yen currency index is going to go down, and if it goes down, that means GJ is going to go up. that was extra confluence to let me know that GJ was on its way upwards. So there you go. Which is why I was looking for buys. So as you can see, I've set my take profit there and my stop loss there, and so I started. I then let price do its thing. All right, on the 30-minute time frame, as you can see here, price just went up and up and up and up. Here, price broke this major resistance zone. It broke it, came back down to retest it with this little wick here, and then went back up. This blue line here represents my 1 hour key level, which is in this case became a 1 hour resistance line. 1 hour is minor, it is not major, as I've explained. So once price broke above my major 4 hour or came back, retested, and went and broke above my 4 hour key level here, and price at the same time also broke and came back down to retest my 1 hour resistance line, that is when I then moved my stops to break even. I was happy that, okay, price is going to continue going up. All right, by the way guys, patience is key. So this trade took a very long time, longer than I normally would hold a trade, but I was really confident that it was going to hit my TP, so I just held. All right, price came back down, sort of ranged here, consolidated it a little bit here, and as price kept showing me rejection after rejection after rejection after rejection of this major support zone, I held, because that made me believe that price really is going to continue going upwards and then hit my TP. So I held, but again, I have rules and I do not trade overnight. I never hold trades overnight. So what I then did, except for if I'm trading gold, that is right. Gold is the only exception, where is the only pair that I'm willing, is the only instrument that I'm willing to trade in a swing trading way. I'm willing to hold that overnight. But with forex and with index pairs or index trades, I never hold overnight. All right. So at this point, after these multiple rejections, retests and rejections of the major support zone, I realized that I was heading close towards the end of the New York session, which is the end of the trading day for me. And like I said, I don't hold trades overnight. So South African Standard Time, New York session closes at 11 p.m. And as price was moving up here and moving up and up and up, at this point it was 10 p.m. as shown here on the screen. It was 10 p.m. and I had to consider closing. So what I did was I just decided to move my stops up, trail my stops up to here, which in hindsight was a very bad place to place my stops, but you know, what's done is done. So I trailed my stops up to here, and then by 10:30, price had peaked and started to come down. And then an hour later, price opened over here. As you can see with this gap, this was the overnight gap. Price opened here, came down, and hit my trailing stop loss, which is where I ended up exiting there. As you can see, price never really made it all the way to my take profit. It just kept consolidating here. It broke back below the major support and then broke back up past that major support zone. And then today from 6 a.m. Thursday 26th of June, it has come all the way down and it is now retesting and respecting my major support zone over here. I am not looking to take this buy yet. I am not really convinced that buys are valid. This is now live, right? I'm not yet convinced that buys are valid. If I can remove this over here, because it's distracting me for some reason. I will only be taking buys if price can break this major key level here. If price can just, you know, do this come back down, retest it, and then move back up. Then I'll be happy then to take a trade, to take a buy over here. Okay. However, I may also be looking for sells. Now sells, I'll only look for sells if and only if price breaks structure, right? If there is what is called a change of character, and price shows me on the 1 hour time frame or on the 4 hour time frame that it's printing lower highs and lower lows. Until then, I'm not looking for any sells, particularly when going down to the yen index. I need some confirmation here, especially on the 4 hour time frame, that the yen is going to go up. If the yen goes up, then I know I can take sells on GJ for GJ to go down. But currently, right now, the yen is still on the yen index is still on a downtrend, which makes me believe that okay, GJ might just go up. Actually, I might just get into GJ now, looking at this current 4 hour candle on the yen index. It shows a very clear rejection of this major resistance zone. By the way, this one is in red because it's a daily major resistance zone. If it's in gray, it's a 4 hour key level. So this red here is a daily key level, which is my daily resistance on the yen index, and it seems like price is rejecting it as it has done multiple times over here. So that might lead me to believe now that GJ might be looking to continue upwards, right? But remember, candle closure is vital. You don't just take a trade on a candle that's still open, right? So as you can see on the 1 hour time frame, it is rejecting this major support for the second time now. So I might just come in again for another buy here, repeating my previous trade over here, with my stops probably roughly around about there. I don't like these massive stops. I like my stops to be 20 pips or less. So let me put it at 20 pips and then come down to a smaller time frame like the 5 minute, and then hope to possibly get in once price retests this line here, the top of this major support, and then rejects it. Maybe I'll get in for a buy. But for now, I'll just keep monitoring price and seeing what happens. If I can just look at my yep, price is still trading above this 50 SMA, which makes buys still valid. Yeah, so I'll probably let you guys know on my Instagram if I indeed did take this trade or not. But anyway, that was a breakdown for yesterday's GJ trade. Didn't really go according to plan, but it was still a profitable trade. I hope I made this easy for you guys to understand. It's really simple trading. There's no need to buy $1,000 courses and enter boot camps and whatnot. Trading is simple, but it is not easy. As long as you keep your trading simple and you don't give up, eventually you will succeed in trading. You will become a profitable trader. So yeah, with that being said, thank you guys for tuning in. Please do like, please do comment on this video, and please do subscribe so I can keep giving you guys more of this incredible content. Cheers guys. Bye.